Now for some technical support. We have three stocks making some technical moves to bring it into focus. And our chartist today is Jay Woods. He's Freedom Capital Markets Chief Global Strategist. It's great to see you again.
Great to see you.
Welcome back. So let's start with Nvidia. They're reporting after the bell. Streets expecting revenue growth upwards of 200% for a third straight quarter. Most importantly, what do the charts tell you?
We're looking back 2 years. I mean, everyone's talking about it. What's it done? This is classical technical analysis 101 when you go back 2 years. Here you have an inverted head and shoulders, 80 points from the head to the neckline. What did it do? It went up 85 points. What happened after that? It gapped. This is what we're going to focus on in earnings. We've had three major gaps. Now, of course, I'm a little wonky, but let's focus on this one, and let's focus on the last one in February. Every time it has gapped up after earnings, you have to watch how it trades the next 30 minutes to the next hour, the next few days. It has held, and it's gone on to a new leg two of these times. There is one time I want to focus on, which was this neutral trend the last half of last year. It was up 240% last year. It did nothing for 5 months. It had a 20% correction because it gapped after hours in August. And what did it do? It closed up a dime. That's a bearish engulfing candle, very negative.
So let me take us back to that for a second. So it gapped which way after hours?
It gapped up after hours to 520.
The next
opened
day.
At 502. Closed at 480, up a dime on the day.
This. Okay.
So you want to watch that price action. And what did it do? It channeled. So this is what we want to watch now. We have a potential channel. We're trading at all-time highs. This is fantastic. It's closed over 952 times. If it can gap up, which we believe the earnings are going to be fantastic, the guidance should be good, watch how it closes, watch how it trades after.
Great.
You could have a setup for a trap, and then it trades in a neutral range. It'd be a great buying opportunity because long-term, let's focus on long-term.
And it doesn't sound like you see a lot of bearish outcome here. It's more channel or upward.
Exactly. But for the traders, you got to watch it. For the long-term investors like my mom, I just start to eat. Mom, just stay in the stock. It's going to be there for the long term.
All right, let's go through the next couple a little bit more quickly. Robinhood's up 60% this year. We haven't talked as much about that one. You think the trend here is changed for the better?
It's changed. What have we seen? We've seen a series of higher lows over a long period of time. We've had a breakout above this area here, and now we're trending higher. We stalled a little bit. They had a Wells notice, but what did it do? It held the 50-day moving average. Fundamentally, they're doing great things. This 401k program is bringing in older investors
it's expensive,
to
get. We'll get into
that. It's expensive, but let's look back. It IPO'd at 38. It's now broken out above 16. 16 is your stop. Yes, the risk-reward setup isn't ideal, but it can slowly trend back towards 30 over 6 to 9 months. So it's a place, stop at 20, a stop at 16 if your risk is a little greater. But the trend has changed, and it's worth noting here.
Very interesting. Finally, the last stock, Pfizer. Before we get to that, just want to take a look at all the vaccine stocks today up across the board in reaction to these bird flu headlines, thinking maybe they can do something for the livestock if it's human to human. CureVac is up 20%. Moderna's up 10%. Pfizer up 2%. And that company also announced $1.5 billion in cost cuts. Takes us to the chart.
Yeah, and Moderna is one that is already broken out. What I see in Pfizer is opportunity. Boring stock, no offense, but long-term risk reward, the setup is favorable. We had a long intermediate downtrend. It broke. It broke above its 50-day moving average, and now it tested its 200-day. It's pulling back. I think this pullback is an opportunity to buy with a 50-day stop, 50-day moving average as a stop, and then the upside, tremendous possible reversal. We can go 35 to 40, and then if it goes slowly, you get a 5.8% dividend to kind of put you to sleep at night as it's really not doing anything. And then people forget about CGen. That deal closed in December, $43 billion deal. The pipeline on the oncology side is tremendous. So expect news to happen because this quarter, things turned around. Their guidance was solid. So I think we're starting to see price turn around, favorable risk reward over the long term.
Trying to look around these corners. Tonight will be fun with Nvidia. Jay, thank you so much for your time. Appreciate it. Jay Woods.